Hi, my name's Adam. Welcome to the channel. Thanks for joining us today. Today we're going to talk about RRSPs and RRIFs and LIRAs and LIFs and how to convert or how to move your registered money into an income fund. And I get this question quite often, and I think this is a primary example of someone like myself that's in the industry that just thinks that like it just flows, like it's not really a question, but of course it's a question. This is a big question. As you hit retirement, what happens to your RRSP? What happens to your LIRA? When do you have to convert it? How does it do it? Do I have to sell my stocks or mutual funds or whatever? So we're going to cover all of that in this video. If you haven't already checked out our Investing Academy, we'll put a link below, as well as our fee-for-service financial planning. If you're getting close to retirement, you're maybe in retirement, don't have a clear plan, maybe something like this topic today. You're not sure when to roll money into a RRIF or a LIF, how it works, the structure of it, when to do it, how much to take out, all of that encompasses the financial plan. We have a link below, parallelwealth.com/planning. You can learn all about our fee-for-service financial planning offerings that we have. So let's start out with LIRAs, a locked-in registered account. Now, a locked-in registered account, we've done other videos on that. We'll link that above here. But a LIRA is basically an account that came from, most of the time, a previous group pension plan. So it's a defined contribution plan. You left the company and you had to roll it into a LIRA, a locked-in registered account. If it's federally regulated, it might be called an LRSP, a locked-in RSP. So either a LIRA or LRSP, they both work the same. They are a locked-in account. You cannot pull them out except for a few reasons, and I'll go over that in a minute here. But when you hit retirement, or when you hit the point where you want to start pulling money out of these accounts, you have to convert it to what's called a LIF, a life income fund. Now, when you convert it to a LIF, there's a few things you want to be aware of, and that's the purpose of this video, is just to kind of give you a high level of kind of what happens, what you need to know, and the questions to ask your advisor or whoever you're dealing with. Now, there's either a provincial or a federal legislation behind it. So before you convert it, you need to know what the legislation is. So it might be the province that you worked in, or it might be federal. Again, if it's federal, it's usually an LRSP. That's what the statement will say. Not all the time, but most of the time. So let's say that your LIRA is BC regulated. It was registered in BC, and thus it's going to be a BC LIF. So what happens is when you move from a LIRA to a LIF, depending on what province or territory you live in, and the regulation of your LIRA. So not even necessarily where you live, but the regulation of your LIRA, you may be able to unlock some or all of it. Now, we have a website with a bunch more information on LIRAs and unlocking. Go to parallelwealth.com/LIRA, L-I-R-A. Scroll to the bottom of that page and you'll see every single province or territory that has an unlocking rule, and it'll be in there. So again, in BC, you can't unlock it. In Ontario, let's say you're watching this, you're from Ontario, and your pension, that LIRA account, is Ontario legislated. When you roll it over to a LIF, during that process, they're going to ask you, do you want to unlock any of it? And you're going to say yes. Say yes 100% of the time. If you're able to unlock any or all of your LIRA, you want to. Now, what unlocking is just you're moving part of it. In Ontario, it's 50%. Instead of 100% going to the LIF, only 50% will go to the LIF, and the other 50% can roll into your RRSP. Now, the benefit for unlocking and getting money into your RRSP is that your RRSP still has that same minimum amount that you have to take out when you roll it to the RRIF, but there's no maximum amount. So when you go forward into retirement, you're going to have a LIF and you'll have your RRIF. The more money you can get into a RRIF, there's no maximum, there's more control. You can take a bit more money out. You can kind of flex that tax situation a little bit better. So if you live in a province, or if you're registered in a province or territory that you can unlock any of it, definitely do it. If you can unlock any of the money, do that. So that's a LIRA to a LIF. Now, next one is RSP. When you hit retirement again, or start drawing income, you want to convert your RSP to a RRIF. Now, people always ask me, Adam, if I'm not 65, what's the benefit of converting an RSP to a RRIF? Because at 65, you can start income splitting. There's a benefit to that. Now, the benefit before 65 is typically most financial institutions, or a lot of them anyway, will charge a deregistration fee. So every time you pull money out of your RRIF, it's free. Anytime you pull money out of your RRSP, there's going to be a deregistration fee, which means that it's typically $25 to $50. So if you're pulling a monthly income out of your RRSP before 65, you're getting charged $25 to $50 a month in fees. By simply moving it over to a RRIF, there's going to be no fees. And you can do that at any age. You have to do it by the year you turn 71 and start pulling money out in the year you turn 72. I'll say this. Typically, you want to start converting your LIRA to a LIF as soon as you retire. Typically with an RRSP to a RRIF as well, but definitely get that LIRA, start drawing that out. Because there's a maximum amount that you can pull out of a LIF, you want to start converting that. Now, what's this process? How do we do it, Adam? Let's say you have a LIRA and an RRSP at Quest Trade, let's call it. If your kind of plan shows that, okay, I need to start pulling out money soon and I need to set up a LIF and a RRIF, and move my LIRA and RRSP over to this LIF and RRIF, you have to just set up those accounts, okay? So it's just setting up an account. When you set up those accounts, you're gonna roll over. There'll be an option to, do you wanna move one of your accounts over? You're gonna say yes, and you'll choose whatever account it is. So if it's a RRIF, you're gonna move your RRSP over. And what happens is, it'll just move it over, okay? You don't have to sell anything. So if you own ETFs or stocks or mutual funds, whatever you own in your RRSP, it will look the exact same when it goes over to a RRIF, okay? It's not like you have to sell it here and repurchase it over here. A, there's a cost to that, and B, it's just a pain in the butt. We're literally just changing the name of the account. So it was an RRSP over here. We're just kind of taking everything and putting it under that RRIF umbrella. It's the same with a LIRA to a LIF. You don't have to sell the underlying holding unless you want there to be. Obviously, if you want to, change holdings because you're entering into a retirement income stream and you want to maybe be more conservative or have more of an income stream focus, yeah, for sure. Definitely there could be change there, but typically you don't have to sell what's in there. It is a very simple process. For our clients, let's say at BCV Asset Management, if our clients are invested there, we will just send BCV an email. We'll say, hey, Jim needs to open up a LIF and a RRIF. They say no problem. We get those set up. We set up payment terms, like do they want to draw monthly or annually? There's some questions there that you want to go around. Once they're set up, we're just transferring everything that's here over to here. When you set up these accounts, these income accounts, part of that application process is, who do you want your beneficiary to be? When do you want payments and how much? So again, do you want the minimum amount? Do you want the maximum amount? If it's a LIF account, you have a maximum target on there. Again, if you haven't watched our video on LIRAs and LIFs and all that, we'll link that above. Make sure to watch that. But there is a maximum amount. So understand what that is. But if you have a plan laid out and I need to pull out 2,000 from my RRIF and 1,000 from my LIF every single month, then when you open up those accounts, you can set up those payments on the application process itself. So make sure to do that. So one of the other questions you're going to be asked when you set up your accounts is, do you want to base the minimum RRIF or LIF payment on your birth date or your spouse's? So if you're married or common law, you can actually base the minimum amount on their birth date. Again, for a lot of you, by default, it's, I just want to take out the minimum amount. So then I don't have to take out quite as much. Again, typically with an RRSP meltdown and proper tax strategy, you want to be taking out more than the minimum. And on that LIF account, you probably want to take out the maximum amount. That's typically what we'll do, and then kind of offset it with that RRIF income. So you can base it off the younger person if you want. I typically don't. I don't see a huge benefit. There are cases that you might want to. Again, talk to your financial advisor, but that is another question that you're gonna have to answer as part of that application process. So again, for those of you that were wondering, like, what is the process? Is it complicated? No, it's not complicated. It's very simple. You don't have to sell anything. It's literally just setting up new accounts and telling the investment firm that you work with to just move everything from over here to over here. It's as simple as that. Obviously, the process of moving into a LIF or RRIF means that you're going to start drawing income. So make sure that you have a clear plan in place, know how much and where from you should be drawing that income from. Hopefully that helps you out. Hopefully that brings some ease to those of you that weren't sure about this process. If you have any questions, or if you've had a bad experience maybe with this process, leave a comment below. We always love to hear what you guys are going through. I love watching you guys kind of comment on each other's comments and have conversation within that. And if you have any other questions around this, leave a comment below and I'll try my best to get that answered as well. Thank you for joining us in this video. We do appreciate the views, you guys taking time to watch these videos, and I really do hope they're helping out, and we'll see you in the next one.